Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody's not aware of this is a journey of an investment of $1,000 to a return of $1 million over a period of 3 years using a strategic or compound return investing. So the objective is try to get 201 trades, each with an average return of 3.5%. It's not 201 consecutive trades, we do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. So following on from yesterday's video, today I'm also going to be sharing with you two more securities legislation, possible rule breaches with regard to dividends and dividend dates. So stay tuned for that. We're also going to be looking at John Reed Stark, who appeared on a space today. Remember, he's the ex-SEC insider, so will be interesting to see what he shared in the space. And I'm also going to be sharing with you two FDA Catalysts upcoming. So before we get started, let's have a look at what's happening in the market. So first headline here from Yahoo Finance. We know this is a huge week. Jerome Powell and the Fed Reserve will be taking center stage in this week ahead with regard to the central bank and the next policy decision. So the Fed is going to be meeting September the 19th and September the 20th, 2023, looking at the latest policy decision, Wednesday, 2 p.m. Eastern time. So I am not expecting an interest rate increase. So hopefully once that is confirmed, we will get a nice bounce in the markets. In terms of earnings, not a big week for earnings, but we will be looking at FedEx on Wednesday after hours. And in other positive news, we also have had another shout out from Unusual Wales, who have again tweeted this week. Senator Mike Crapo asked the SEC Chair Gary Gensler about MMTLP. So again, a very positive and timely reminder there from Unusual Wales. So following on from yesterday's video, before we look at the two pieces of legislation, I'd like to have a quick reminder in terms of one of the rules that we looked at, and that was Rule 6440, Section A, Part 3. So this is a rule I highlighted in the previous video. What I'd now like to do is share with you a post that I added earlier today, just to emphasize why this one is exceptionally important. So this is a rule used by FINRA. It's used in very exceptional circumstances, or should we say what they call extraordinary events. So this has previously been used in situations which we will all be aware of: 9/11, 2008 financial crisis, COVID-19, 2021 Capitol Hill, and surprise, surprise, it has now been used for MMTLP. So what's the reason and why was it used? So, and does this qualify as an extraordinary event? Apparently it does, because if the U3 halt had not happened, we could have had a situation where hedge funds and broker dealers would have lost significant amount of dollars, and certainly that would be, for some people, an extraordinary event. So we're now going to look at the SEC and FINRA rules with regard to dividends. So under Section 1 here, what rules govern the reporting of dividends? When must a company report a declaration of a dividend or other distribution? So the rule here states, refer to Rule 10b-17, which is an untimely announcement of record dates of the Securities Act, Securities Exchange Act 1934, which requires an OTC equity issuer to provide FINRA's operations department notice 10 days prior to the record date of the distribution, the record date of the following corporate actions. Number 1, the issuance of a dividend or other distribution in kind, in cash or in kind. Number 2, stock split or reverse split. But the one we're interested in is number 1, dividend or other distribution in cash or in kind. So we were going to receive a dividend in terms of the share in Nexbridge. So what FINRA have stated here, according to this rule, that they must have received 10 days notice. So this is a rule that my opinion on here is, if this rule was broken by the company, then FINRA would have taken action, because this is a rule that should have given them 10 days notice. So if you remember the U3 halt, they stated the dates were obviously not going to allow for settlement, but obviously if the dates were not going to allow for settlement, then they would not, what they're basically saying is the dates were not adequate. So it looks like they are basically saying this rule was breached, and if it was breached, then why did they not charge metamaterials with breaching this rule. So let's have a look at the rule. So the requirement of this rule, it states here, the issuers of publicly traded securities must give notice of certain specified actions related to such class securities in accordance with the Rule 10b-17 Section B. Notice must be given at least 10 days before the record date of the event. Notice must be in a timely manner and in a way that is reasonably calculated to reach all investors. So the purpose of this is to protect investors, and we know that this rule covers dividend payments, so it's certainly applicable in MMTLP. So the question here is, if the company followed this rule, then the company are not in breach of this rule. However, because the purpose of this rule is to ensure the dates are transparent and clear for investors, so why were the dates not transparent? Why were the dates not clear to the investors according to FINRA's U3 halt? Maybe it is a case here. I put to you, FINRA, that this rule is possibly breached from your side because the dates were inadequate according to you and your reasoning for the U3 halt. So what we're now going to look at is number 2, what is an ex-dividend date? So this is again a FINRA rule. So we're going to look at FINRA rule 11140, and it's basically looking at the ex-dividend date. So this is a rule that is used by FINRA. So we're going to look at, again, from the point of AI, how is the FINRA rule 11140 used? So this is used to establish the ex-dividend date for corporate actions on or over the with regard to OTC securities, including obviously ADRs. The ex-dividend date is the date on or after which a security is traded without the right to receive a dividend or distribution. So remember, one of FINRA's concerns was people who potentially bought on after the 9th, they may not have received the dividend. So that was their key concern. So FINRA uses 2 methods to determine the ex-dividend date for a corporate action. First of all, they look at the ex-date for a corporate action after definitive information concerning the declaration and payment of a dividend or the issuance of rights. So remember, in our case, the dividend was not cash, it was the shares of Nextbridge, and the rule also is used to ensure investors have equal access to information about X dates and to protect investors from being surprised by a sudden drop in the price of the securities after a dividend or other corporate action is declared. So again, I put to FINRA that if this rule was adhered to, then there would have been no surprise, there would have been no need for risk with regard to the protection of investors. And I would also put to FINRA here, if this rule would have been complied by, then protection of certainly of MMTLP investors would not have been an issue. So contrary to this rule, I believe investors have not been protected, and I also believe investors have been surprised, and also I believe investors were led to believe that the dates were clear, the dates were confirmed, the dates were obviously received by FINRA within the 10 days as required by the legislation we're looking at. So who is actually in breach of these rules? The next thing I'd like to share with you is a space by John Reed Stark that was hosted earlier today, and in this space he titled it "Ask Me Anything, Let's Talk SEC, No Holds Barred, Bring on the Hate." So this was an interesting space, but before we look at the space and what was shared, for a quick profile here of John Reed Stark. So he was featured in a previous video. So remember, he also appeared on a space where he stated he could ring up a friend at FINRA, make a call, get the blue sheet data as a favor. So that's recorded, that's also covered in a previous video. And if we have a look at his profile here, we can see here he served 11 years as a founder and chief of the SEC Office of Internet Enforcement. So he's a significant insider. So I'm going to share with you some of the things he shared in the space, and he was talking about securities legislation, which we're looking at today. And he stated that almost all securities legislation is a grey area and is significantly subjective. They are principle-based rules, and he also said here that the SEC makes rules after instructions from Congress. So that was interesting. So it also highlights the fact that Congress has the power to set the rules to the SEC, then the SEC must follow those rules and implement the rules and make sure they are being followed. So we know there was significant pressure on the SEC years ago after the Madoff situation. I think from what I remember at that time, the SEC stated, don't worry, we will get our house in order. But I think it may be now time for Congress to say, look, your house is not in order. You need to obviously make sure the rules are followed. There are significant breaches here. Investors are being hurt. So again, credit to John Reed Stark for being honest and sharing his insights into the legislation. Finally, I'd like to finish off by having a look at two stocks that we shared in our weekly watch list. These are under the Biotech stock channel, and this is also used from the biopharmaceutical FDA Catalyst website. So the first stock is ticker symbol CARA, and the other one is SLNO, which have got upcoming catalysts. So if we have a look at, first of all, SLNO, we can see here there is a phase 3 drug trial, and this is for diazoxide choline controlled release, so excuse the pronunciation there, also known as DCCR. So there is a catalyst. This catalyst in the third quarter of 2023. We're looking at withdrawal period cohort initiated October the 3rd, 2022, and top line data is due in the third quarter of 2023. So we'll be looking at this stock over the next few days. And the other one I'm going to be sharing with you is ticker symbol CARA, also known as CARA, and this is we have a phase 2 trial here for the drug called Korsuva. So this is a phase 3 internal part A data, and the drug the results are due in the fourth quarter 2023, but could also be earlier. So ticker symbol CARA. So if you would like to get daily stock alerts as well as information from our weekly watches and the challenge, you can join us. Details are in the description below. Thank you very much for watching. Please stay tuned.